His name is Takashi Kotegawa, but in financial circles, he is known by the nickname BNF. He is not a big bank CEO, not a flashy venture capitalist. He was a reclusive man who rarely appeared in the media, trading quietly from his small apartment. Yet it was this calm and disciplined figure who turned his initial capital of 6 million yen, about 15,000 US dollars, into more than 20 billion yen, equivalent to over 160 million US dollars in less than a decade. Every dollar of profit was made simply by reading the price chart. No news, no rumors, no emotions. This is no fairy tale. It is a textbook example of how the cold precision of Japanese discipline, fused with Wall Street principles, can forge a relentless trading machine. Now, let's dive into BNF's legendary trading style and the four timeless lessons that carried him from a video game addict to Japan's ultimate market wizard. Quintessential lesson number one: exploiting extreme volatility, the psychological leverage of the independent trader. In the history of financial markets, where millions of traders push and shove in search of opportunity, there are rare individuals who step out of the crowd and etch their names into legend by breaking every conventional rule. Takashi Kotegawa, known by the moniker BNF, embodied a philosophy unlike any other. He did not chase trends like the majority. He hunted panic. To most, the market is a battlefield of hope and fear. To him, it was a stage where human emotions exposed raw weakness. While 80% of participants were ruled by greed and fear, BNF chose to stand apart, observe, and strike when the crowd lost its mind. That philosophy crystallized into his first great lesson: exploit extreme volatility. The market is an arena where information, money, and emotions collide at terrifying speed. When a poor earnings report is released, or when a shocking economic headline hits, the first reaction of the masses is not rational calculation. It is instinctive flight. They dump shares not because fundamentals have instantly collapsed, but because they fear others will sell first. That is the irrationality BNF hunted. He understood that a stock could plunge to an unreasonable level not because its foundation had evaporated, but because human psychology cracked under pressure. And in those moments, he stepped in, coldly buying while the rest screamed, "Sell." Warren Buffett's timeless maxim, "Be fearful when others are greedy, and greedy when others are fearful," was taken to a far harsher level by BNF. Whereas Buffett applied it to the long arc of economic cycles, BNF applied it in razor-sharp timeframes. He didn't wait years, quarters, or even months. He waited for extreme fear to erupt within hours or days of trading. And when that moment came, he struck, turning the undisciplined panic of others into the fuel for his own wealth. What set him apart was not only philosophy, but execution. BNF needed a mechanism to distinguish true extreme volatility from ordinary pullbacks. He built objective rules to strip away emotion. One such rule was price decline thresholds. A stock collapsing 20 to 30% in a short span often signaled market overreaction. When a plunge of 20 or 30% occurred within just a handful of sessions, it reflected not intrinsic value, but contagious fear. BNF saw opportunity in that chaos, but he did not rely solely on percentage drops. He studied oscillators like RSI and stochastics. When RSI crashed to 15 or even 10, it signaled rare, brutal overselling. That meant nearly everyone willing to sell had already sold, and selling pressure was close to exhaustion. On Wall Street, that is the moment when shorts prepare to lock in profits and the bold prepare to buy. BNF was the one patient enough to wait for that very second. He also combined historical support zones and moving averages. When prices hit a support level that had repeatedly held, while also plunging far beneath the 25-day or 75-day moving average, it signaled exhaustion. Wall Street's unspoken law is clear. Anything that moves too far, too fast, eventually snaps back toward its mean. This is less a financial principle than a law of physics. And BNF simply bet that the market, like a pendulum, always returns to balance after being stretched too far. Yet identifying extremes was only half the battle. Survival depended on speed and discipline. Once he bought into an extreme oversold zone, BNF never fantasized about holding for a new peak. He was not a long-term investor. He was a hunter of technical rebounds. What others called a dead cat bounce was his bread and butter. After a collapse, a stock almost always stages a rebound, however short-lived, and that was his exit point. His profits on each trade were not astronomical, but they were consistent. He was satisfied with 3 to 7% gains, cashing out the moment the bounce arrived. 3% may sound small, but repeated hundreds of times with iron discipline, it compounds into fortune. This is the power of steady accumulation. In a world of dreamers chasing the jackpot, BNF became the pragmatist, stacking small wins until they built hundreds of millions of dollars. His edge came not only from discipline in profit-taking, but in loss-cutting. For every entry, BNF set razor-thin stop losses. If the stock kept dropping after he bought, it meant he misjudged the extremity. And when wrong, he never argued with the market. He cut immediately, without hesitation. On Wall Street, one cold truth stands. A losing trade is not personal failure. It is the cost of the game. BNF understood this better than anyone. His ability to exit swiftly from bad trades kept him alive and rising, while the undisciplined were crushed. If this strategy were easy, why doesn't everyone do it? The answer lies in psychology. To buy when everyone else is panic selling requires a rare kind of steel. To hit the buy button while screens flash red, financial news screams collapse, and friends and colleagues urge retreat demands something the crowd lacks: absolute detachment. BNF built that edge by living reclusively. He cut out the noise, avoided social chatter, and insulated himself from opinion. In his small apartment, he created a sterile environment where decisions were made on charts and numbers, never on emotions or headlines. Mechanization of his trading was another key. He did not turn each decision into an emotional war. When RSI hit 15, when price touched support, he bought. No hesitation, no fear, no hope. He acted like a machine. And in a world ruled by emotion, behaving like a machine is the ultimate edge. The quintessential lesson of BNF is not that he was smarter than others at predicting the future. The market is littered with geniuses who predict wrong. His difference was discipline in executing a proven framework. He did not attempt to forecast where the market would go. He simply waited for it to go too far, then bet on the inevitable return. In the grand mosaic of Wall Street, exploiting extreme volatility is the art of profiting from human emotional instability. It proves that massive profits don't require insider information or exotic tools, but the exploitation of timeless weaknesses, fear, and greed. Success is not about predicting right. It's about disciplined execution in the most chaotic moments. And that is why BNF, a reclusive man in a modest apartment, with no glamour and no noise, became a legend of Japan's day trading scene. He proved that while millions drown in emotional whirlpools, one man, keeping cold detachment from the crowd, can build a fortune out of market madness. Quintessential lesson number 2. Market speed is money. The art of lightning execution. In the world of short-term trading, where day trading and swing trading reign, one cold truth dominates: speed is money. This is not a slogan. It is the very operating principle of the market. If Takashi Kotegawa, known as BNF, taught in his first lesson that one must exploit extreme volatility and buy when the crowd panics, then the second lesson takes it further. Even if you spot the opportunity, if you are not fast enough to execute, that opportunity is already dead. On the Tokyo Stock Exchange, as on Wall Street, speed is the dividing line between those who make millions and those who miss everything. While value investors may spend weeks dissecting a financial report, and trend followers may take days to confirm a pattern, for a day trader, the window of opportunity may stay open for only minutes or even seconds. A delay of 5 seconds can turn a brilliant buy at a 25% drop into a foolish entry at a price already rebounded by 5%. In a world where each tick of the tape can change destiny, BNF turned speed into a philosophy. He eliminated hesitation, leaving only snap execution. He viewed speed as the tool to maximize capital efficiency, because when money is cycled quickly through multiple trades, capital utilization reaches its highest level. More importantly, speed is the key to exploiting technical rebounds, fragile, fleeting phenomena reserved only for those fast enough to grab them. In the day trading environment, BNF became a cold machine. He emphasized one rule: if you have to stop and think, you are already too slow. And if you are too slow, the market will not wait for you. This ability was not innate, it was engineered. BNF relied on a mechanical decision framework. He created rigid if-then rules, leaving no room for hesitation. If a stock falls 25% within 30 days and the RSI drops to 15 while price touches a major support, then immediately buy a predefined lot. If price rebounds 5%, then sell all. If price falls another 2% to the stop loss, then exit instantly. No debate, no further analysis, only action. One of BNF's secrets of speed was tape reading. Though the days of physical ticker tape are long gone, the essence remains. Everything is in price action and order flow. He focused on short-term charts, 5-minute or 15-minute windows, watching for surging volume at support levels during oversold plunges. For him, the media's headlines were echoes of the past. The only thing that revealed the near future was the tape in front of him. Whoever mastered the tape mastered speed. Most traders fall into the trap of overanalysis. They draw Bollinger Bands, flip on MACD, pile a dozen indicators onto their screen, and while they wait for confirmation, the opportunity vanishes. BNF was different. He stripped away complexity using only the most essential tools, enabling decisions in 1 or 2 seconds. That was the difference between an amateur and a legend. But speed is not just mental reflex, it is execution mechanics. In a violently moving market, the choice of order type can decide victory or defeat. When prices were free falling, limit orders placed in advance at key support levels allowed BNF to catch favorable entries before rebounds. When taking profits, he did not hesitate to use market orders to exit instantly, because in those moments, speed outweighed precision. Consistency was his greatest edge. BNF never expected perfection. Sometimes he slipped on entry, sometimes he was early or late. But the difference was stark. While average traders might miss 3 out of 10 setups due to hesitation, BNF missed only 1. That tiny edge, repeated thousands of times, compounded into a mountain of profits. Liquidity was another non-negotiable factor. Speed only matters if the instrument is liquid enough to allow instant entry and exit without distorting price. BNF chose large-cap Nikkei stocks, where he could push heavy size within seconds without getting trapped. Illiquid penny stocks, by contrast, made speed meaningless, as the market itself lacked the depth to guarantee execution. Speed was also psychological discipline. Acting instantly left no room for hope, no space for regret. If an opportunity slipped away, BNF did not waste a second sulking. He simply moved to the next ticker. If a stop loss was hit, he sold immediately, without clinging to hope that the market might turn. In trading, hope is the enemy of speed, and the slow are always victims. BNF was famous for trading massive positions, and he could do so only because he trusted his speed to cut losses the instant the market turned against him. Speed allowed him to harness high leverage while still controlling risk. In Wall Street theory, execution speed is what lets you scale up without exposing yourself to ruin. A trader who can cut a 2% loss in 10 seconds will always outlast the one who takes 10 minutes to make the same decision. Quintessential lesson number 2, that market speed is money, is proof of ruthless efficiency in trading. It forces you to simplify your system, train your reflexes to act like a machine, and purge emotions that slow execution. BNF proved that transforming yourself into a trading robot with lightning execution is the shortest path to convert extreme volatility into steady, massive profits. Speed is the weapon, and discipline is the ammunition. And in the financial battlefield, the fast are not just the winners. The fast are the survivors. Lesson 3, pure technical analysis, the edge of ultimate simplicity. In the world of finance, where millions of pieces of information are released every single day, where analysts argue endlessly over earnings reports, monetary policy, or geopolitical tensions, there is one truth few dare to admit. Most of that data has already become outdated the moment you read it. Markets move in real time, and the numbers on the chart are the final reflection, unbiased, unfiltered, untouched by the lag of the media. This is the foundation of the philosophy BNF followed: absolute focus on pure technical analysis. He considered price and volume to be the only true language of the market, while news was nothing but noise. In academia, there is a famous theory called the efficient market hypothesis. Controversial as it may be, BNF turned it into a practical weapon for short-term trading. All meaningful information is already priced in instantly, which means reading reports, analyzing central bank statements, or debating geopolitics is an exercise in hindsight. By the time news hits the wire, the big players have already made their move. News shows you the rearview mirror, while price puts you right in the flow. To understand why BNF eliminated news completely from his decision-making process, you have to recognize three characteristics of financial information. First, it is emotional. Headlines are designed to trigger fear or greed, pushing traders into impulsive, irrational behavior. Second, it is delayed. In intraday trading, a 5-minute lag is enough to cost you the best entry. And third, it is inconsistent. Fundamental analysis is loaded with subjectivity, while charts are pure objectivity. That's why BNF often said with chilling clarity, only the tape on the screen tells the truth. The power of this method lies in simplicity. Simplicity doesn't mean shallow, it means optimized. While most traders bury themselves under layers of indicators, trapping themselves in an analytical maze, BNF stripped everything down to essentials. A 25-day moving average, a handful of basic oscillators, and volume analysis. Nothing more. With that, his decisions became sharp, speed turned into an advantage, and discipline was enforced across thousands of trades. This simplicity also brought something greater: consistency. A simple system can be backtested, repeated, and applied thousands of times without breaking your psychology. Hedge funds on Wall Street know this well. Complexity invites error. Simplicity endures. By focusing strictly on price and volume, BNF exploited temporary market inefficiencies without being blinded by layers of noise. BNF was not naive enough to believe news didn't exist. He simply ignored the content and focused on the market's reaction. If a company announced falling profits and the stock dropped 20%, that reaction mattered far more than the report itself. For fundamental traders, that was a reason to bail. For BNF, it was a golden setup. He understood that markets often overreact, and when fear maxes out, a technical rebound becomes highly probable. By betting on that snapback, he didn't need to wait for the company to fix its fundamentals. He just exploited the temporary imbalance that psychology created. To reinforce his decisions, he watched volume. A steep drop on massive volume usually signals peak panic. But if reversal candlestick patterns like hammers or dojis show up right after, it often reveals quiet accumulation. Big institutions, the so-called smart money, are usually buying as the retail crowd dumps in fear. BNF didn't need a single report to know that. He saw it in the raw language of price and volume. That was pure market reading. The financial markets are nothing but a stage for human behavior, and human behavior is cyclical. Greed and fear never disappear. That is why pure technical analysis is the perfect tool. It doesn't care about causes, only about reactions. If a stock falls 25% to a major support level, the probability of a short-term 5% bounce is high enough to trade. That rule doesn't need a news explanation. It's confirmed by history's repeated behavior. Another edge of this approach is independent thinking. When you follow news, you fall into the trap of confirmation bias. You read a negative report and start scanning the chart for reasons to reinforce fear. When headlines are positive, you look for excuses to buy, even if the chart doesn't agree. BNF sidestepped this psychological loop because he never let news into his mind. The chart was the only judge. Price and volume were the only law. That gave him absolute objectivity. And that objectivity was the foundation of iron discipline. When it was time to cut losses, he cut without hesitation. When profits hit target, he booked without greed. This is where most traders fail. Emotions hijack their execution. BNF, by eliminating the emotional contagion of news, put himself in the mindset of a decision-making machine. BNF's third essential lesson is not some secret trick or magical indicator. It is extreme minimalism, used as a weapon to carve out an edge in a game most believe unbeatable. By focusing solely on price action and volume, he stripped away noise, shortened reaction time, and built a competitive advantage most traders ignore. On Wall Street, where money moves at the speed of light, simplicity is not a weakness. It is the sharpest blade. And in BNF's world, the chart wasn't just a tool. It was the scripture, the compass that guided him across the chaotic oceans of the financial markets. Lesson 4. Eliminating personal emotion. The discipline of a hermit and absolute risk control. In the high-speed world of trading, where every strategy can be copied, every technical tool can be coded, and every piece of news is updated instantly, the real difference between the few who succeed and the majority who fail does not lie in knowledge or technology. It lies in psychology. Wall Street has long proven this harsh reality. The market doesn't beat you. You beat yourself when greed and fear take control. No one can destroy your account faster than you can when you ignore stop-loss orders, cling to false hope, or let greed stretch a profit until it turns into a loss. This is why BNF built a trading philosophy rooted in emotional detachment. He chose to live and operate like a hermit, isolating himself from noise, shielding his mind, and letting the chart and the system dictate every decision, not his emotions. BNF's hermit philosophy was born from his understanding of the destructive nature of emotions in markets. Greed and fear are enemy number one. When a stock rallies hard, greed convinces you to hold for a few more percentage points, only to lose everything when the trend reverses. When a stock falls, fear makes you cut too early, or worse, not cut at all, leading to disaster. BNF knew this cycle well, and the only escape was to remove emotion entirely from the equation. He lived in seclusion, untouched by discussions or community chatter. He viewed trading as pure statistics, where wins and losses did not define his personal worth. What turned this philosophy into power was capital discipline. In his strategy of exploiting extreme volatility, BNF often bought into oversold levels, a dangerous play if the market kept dropping. To survive, he set absolute stop-loss rules. Every trade carried a predefined exit, usually just a few percentage points away from entry. If price hit that level, the sell order was executed immediately. No bargaining, no exceptions. Many traders fail because they hold on to losers and pray. BNF did the opposite. He admitted mistakes instantly and preserved capital for the next opportunity. Beyond stop losses, he enforced strict position sizing. Even while trading massive volumes with high leverage, he ensured that risk on each trade remained small relative to total capital. That way, no single mistake could wipe him out. This wasn't just financial strategy, it was psychological strategy. When potential loss stays small, the mind stays calm, preventing panic that can shatter a system. BNF understood that emotional stability begins with capital safety, and controlling size was the key. A critical element of his emotionless discipline was eliminating regret. There are two classic regrets every trader knows: closing a profit too early and cutting a loss only to watch the stock rebound. BNF avoided both by sticking strictly to plan. If he targeted a technical bounce of 5% and hit it, he took profit without looking back, even if the stock ran another 10%. If he cut a loss and the price recovered, he still felt no regret, because what mattered was adherence to discipline. Following the system mattered more than being right on any single trade. In markets, consistency across many trades wins, not perfection in every trade. BNF's reclusive lifestyle was not an accident, but part of his psychological strategy. He lived simply, far from luxury, because he knew extravagance turns profits into dependency, and dependency breeds pressure to make money at all costs. Pressure breaks rules, and broken rules lead to collapse. Instead, he kept his life steady, so his mind was never dragged by swings in wealth. In that stability, he could trade with machine-like consistency. Another hallmark of his approach was the balance between patience and disciplined impatience. BNF could wait for hours, even days, for a clear oversold signal. But when the setup appeared, he acted instantly. Patience to wait for the right moment, and disciplined impatience to exit quickly when needed. The bridge between these opposites was emotional detachment, forged over thousands of trades. Equally striking was his balance between confidence and humility. BNF had the confidence to size up aggressively when his system triggered, but also the humility to admit mistakes and cut losses immediately. This rare combination set him apart, since most traders become blind when confident and paralyzed when humble. BNF embodied both because he trusted his system, not his ego. The ultimate result of emotional elimination was uninterrupted compounding. Emotions usually break winning streaks. After a few wins, greed drives traders to over-leverage and blow up. After a few losses, fear makes them miss the next opportunity. BNF broke this cycle by keeping risk consistent regardless of past outcomes. This allowed his equity curve to rise steadily, compounding over time instead of spiking and crashing. In a world where technical indicators can be cloned and systems can be coded, the real edge doesn't come from method. It comes from discipline. This is where BNF was untouchable. He turned emotionless discipline into an unreplicable edge, because discipline isn't software you can buy. It's forged by training and willpower. Wall Street's sharp reality has proven time and again that trading success is the fusion of method and psychology. A system might win 60% of the time, but if your psychology only lets you execute 40% correctly, you will lose. Conversely, someone with discipline like BNF executes his system 100% of the time, and that difference is what builds fortunes. BNF's fourth essential lesson closes with a cold truth. If you want to survive and win, you must trade like a machine, not a human. The market is a never-ending psychological test, not a quick intellectual game. Takashi Kotegawa lived and proved that with disciplined detachment and absolute risk control, one individual can turn the chaos of markets into a path to lasting prosperity. The legacy of BNF, the power of supreme discipline. We've analyzed the extraordinary career of Takashi Kotegawa, known in the financial world as BNF, a man who proved that hundreds of millions of dollars in profit do not require complex analytical models, powerful connections, or genius-level macroeconomic predictions. His success came from something brutally simple, the flawless and consistent execution of a straightforward system, reinforced by the iron discipline of a hermit. The legacy BNF left behind is not a secret chart pattern, but the perfect fusion between a strategy that exploits market inefficiencies and a psychology of total detachment. This synergy transformed him from an ordinary individual into an enduring symbol in trading history. Looking back at his journey, we see that his four core lessons do not operate in isolation, but interlock like the gears of a finely tuned machine. His strategy of exploiting extreme volatility was the source of his profits, because he understood that fear at its peak and greed at its excess always push markets far beyond fair value. While the crowd was swept away by distorted emotions, he patiently waited for technical rebounds, not to outsmart the market, but simply to exploit temporary imbalances. Next, execution advantage served as his weapon. Speed was a matter of life and death. A delay of even a few beats could turn a winning trade into a losing one. Speed eliminated hesitation, removed emotional paralysis, and gave him clarity. When opportunity appeared, action had to be instantaneous. Hesitation was never an option. At the same time, his focus on pure technical analysis became the cold, calculating brain of his system. BNF eliminated noise from news and fundamentals, relying only on price and volume, because they reflect everything, and they do it faster than any other channel. Simplicity was not laziness. It was a deliberate strategy to accelerate decisions and protect himself from biases born out of chaotic information flow. But the foundation that bound everything together was psychological discipline and emotional detachment from results. This was the ultimate survival principle, the only true weapon. He cut losses instantly without hesitation. He locked in profits exactly as planned, never allowing greed to overstay. He turned the hardest part of trading into mechanical reflex. Accept small mistakes to protect capital. Treat a losing trade as nothing more than a necessary business expense. That emotional detachment transformed him into a stable machine, operating without interruption in the chaos of markets. BNF's greatest legacy is not the hundreds of millions of dollars he earned, but the powerful statement that discipline is the only competitive advantage no one can replicate. You can buy the same software, you can study the same charts, but you cannot buy absolute detachment when faced with loss. That invisible asset, that fortress of discipline, is what carried him to the top. BNF turned trading from chaotic art into a measurable statistical process. He waited for extremes. He acted the moment signals aligned. He managed risk absolutely through unwavering stop losses. His success was not built on a few lucky hits, but on thousands of small trades, executed with consistency, step by step building an upward equity curve. A system that appeared boring on the surface, when executed by a disciplined man, produced financial results so dramatic the world could not ignore them. For anyone seeking lasting success in financial markets, BNF's story is not a myth. It is a cold reality. Simplify your system if it is too complex to execute at the speed required. Isolate yourself from the noise to protect decisions from crowd-driven emotions. And above all, respect risk. Treat stop losses as a mandatory cost of business, never as a personal failure. The final lesson BNF leaves us is this. Learn to find opportunity in the chaos of markets, but act with the calm and discipline of a hermit. That balance between chaos and discipline is the only true path to turn violent volatility into stable, lasting profit.